project the screen. Okay. Got it. Yeah, I'm trying to project my screen so that, well, I don't know. Okay. Yeah, so the focus of the presentation is on how the 2022 Canada income tax rate. So every year, the Canada government change the tax rate applicable to different taxable income band. Then how refund balance owing is being determined, the common tax deduction and credits, then maybe some strategies to reduce our taxable income. Yeah, so this slide on the left-hand side shows how our tax refund is being calculated. So basically, the key element in the computation of taxes is, so at the end of the year, government look at how much income tax you have paid versus what you should have paid. What you have paid is what has been deducted from your employment income versus what you should have paid. Now, what you should have paid is dependent on your taxable income, and your tax credit. So the goal is, how do I reduce my taxable income? How do I increase my tax deductions? How do I increase my tax credit so that my taxable income can go down? And if your taxable income reduces, because the tax rate is applied on your taxable income. So the lower your taxable income, the lower the tax payable you are going to get, then most likely the higher your tax refund. So from
Mr.
our salary
Shaya?
income, yep.
Mr. Shaya, sorry to interrupt you. I just want to say, okay, let me speak on behalf of myself. You know, I do not know all these terms you're talking about. Payable, taxable income. Can you please speak it in layman's English, such that anybody who is just coming into the system can understand what you are referring to? Because how do we know what tax should be paid and shouldn't be paid? Just talk to us like, you know, we are layman.
Okay, so from our salary income, so personal income tax covers your salary income, your sole proprietor income. So if you have a sole proprietor business, you are supposed to include the record of your sole proprietor in your personal income tax filing. Also, if you have unregistered business, so we have some people that their business is not registered as a sole proprietor, but they operate a business either from home, it's not registered at all. Such record too should be added to your personal income tax filing. The only thing that should be excluded from this is incorporated business record. So for example, if I have a car, maybe we have two cars in our family and we dispose one, we sell one of the cars. Either I make a loss or a gain. The government expects you to report that income or loss in your personal income tax. Also, worldwide income, for those that's maybe just coming from Nigeria, or you still earn some income in Nigeria, you are expected to report that income. Since you are a resident of Canada, you are supposed to include the performance of the income earned from Nigeria in your personal income tax. Now, moving to this side, as Elia said, your salary income, plus if you have other business income, then plus other income. Let's assume I sold my car, other income. Then addition of all these three gives me the total income. Now, for my total income, there is what we call tax deductions, which we are going to look at during the course of this presentation. So the total income minus total deductions will give us the net income. Then from your net income minus other deductions, you get your taxable income. As Ella said, this taxable income is a major critical factor that determines how much tax you pay. Now, from your taxable income, we now look at your tax credits. Your tax credits, we are going to look at them, all these medical expenses and the likes. So the tax credits will be converted into monetary value. For example, now, home buyer's amount is a tax credit. and the value in 2022 is 10K. Yeah, is 10K. Now that 10K, $10,000 will be converted at 15% to money. 15% of 10,000 is 1,500. So that 1,500 is a tax credit in monetary terms, and it will be used to reduce your tax payable. Now, what happens is on your taxable income, the tax rate will be applied, the applicable tax rate based on your taxable income amount. Let's assume for this particular taxable income, 58K, let's assume the tax rate is 20%. So they will apply 20% on this amount to determine the amount of tax payable you will pay, but the tax credit will now reduce your tax payable. So as Ella said, the major focus is how do I reduce my taxable income? And you can only reduce it by increasing your tax deductions, by increasing your other deductions, and by increasing your tax credits. So those are the things that goes into the play. Your taxable income will apply the tax rate to determine the tax payable, but your tax credit too, when it's converted into monetary value, it will reduce your tax payable. So at the end, we are looking at my tax payable amount versus how much I should have paid. So if my tax payable is higher than how much I've paid for my income tax, then it means I'm owing the government. So that will be a balance owing. I will owe the government. But if my tax payable is lower than how much I've paid, then it means that the government will refund me. During the course of the presentation, we are going to look at that. For personal income tax, individual, the deadline is April 30th, 2023. I think that falls on a weekend, so it will be May 1st. Then, as Ella said, sole proprietor or independent contractor or partnership, you have the leeway to file your tax. The deadline is June 15, 2022. But the implication of this is if you're a sole proprietor and you wait for these dates to file your taxes, if you owe after filing your tax, if you owe, then government will charge you interest from this deadline, from May 1st to June 15. So we always advise, even if you're a sole proprietor, you don't know where you'll fall. If you're a sole proprietor, please just follow this deadline, because if you owe after filing on these dates, government will start charging interest on the amount you owe from April 30th. Now, this is the tax rate. For those of us that maybe are new in Canada, compared to Nigeria, the tax rate in Nigeria is mostly below 10, 12%. But in Canada, government generates majority of its revenue from taxes. So they want to tax us at income tax level. So for example, this is the lower band rate of your taxable income. So if your taxable income is lower than this amount, 5197, the federal will charge you 15%. Ontario province will charge you 5.05%. So the addition of these two will give us like 20%, 20.05%, 20.05%. Now, if your taxable income is greater than this amount, but is below 100,392, the first 5197 part of your income will be charged at 15%, while the remaining parts will be charged at 21% for federal. The province will charge you 9.5%. So let's assume my taxable income is 60K. The first 5197 will be charged, the federal will charge me 15% on the first 50%, 5197%, 5197 part of my 60K, the federal will charge me 15%. The province will charge me 5.05%. Now the remaining balance, that's 60K minus 5197. Let's assume it's 10K. The province will charge me 21% on the remaining 10K. No, the province will charge me 9.15%, while the federal will charge me 21%. So the higher your taxable income, the higher your tax rate will be at the end. Now, looking on the flip side, now for small businesses, small business relates to incorporated business. That's why we always advise people. If you're in Canada and you don't have a side business, you don't have a side gig, you don't have an incorporated business, most likely you'll be charged as a lower. I know some people, I have some clients that they are just doing contracts. Their income is over 100K or 200K, and they prefer to pay taxes at this rate. So imagine someone that is earning 200K from contract as salary is paying tax effective at 12.2% compared to someone that's all the salary is coming as salaried income. That over 200K, imagine the taxes will be at 29% and 26%. So if you have a side business that is registered, that is incorporated, and you can push a lot of your contract job, contract salary into this, effectively paying lower taxes. Now, these are the key changes. So every year there are key changes to the Tax Act. So for 2022, I just pick like 4 key changes that we just need to know. The first one is repayment of federal COVID-19 benefits. So during the pandemic, government supported a lot of individual and families, people that lost their job. We were given a lot of benefits. But in last year, government like compelled most of us that to pay back this benefit, in the sense that after evaluation, they realized that some people should not have benefited from the COVID payment, or some people based on their salary income, they should not have benefited. So governments mandated people to repay back. So some people pay back 5K, 10K. Now government is saying, because you paid back those amounts, you have the opportunity to use that amount repaid to reduce your taxable income. Either you pay back 1,000 or 2,000, you can use this to reduce your taxable income. Now, this is on medical expenses. So government is trying to encourage family to have more children, to support population growth, to increase the workforce. That is all essence. So they're saying for people that want to use fertility clinics or surrogacy mothers to get children, they are ready to support you in getting this medical credit, and from the medical tax credit, you can use it to reduce your tax payable. Then first-time home buyer amount. In 2021, this credit, the value was 5K. That's been increased to 10K in 2022. Now, who is the first-time home buyer? First-time home buyer is if you purchase your new home in 2022 and you do not live in another home that you or your spouse or common. So if, for example, if you have a common law partner or a girlfriend and you guys are common law, according to the law, even if you have a girlfriend or you live with someone that you're not married to, if you guys live consecutively for 12 months, technically you're a common law partner according to the Tax Act. So let's assume maybe your partner has a property and you're staying together and you purchase your own property within. Government is saying you are not eligible for this first-time home buyer or in any of the 4 preceding years. So you are only eligible if you do not live in that property for like 5 years. So let's assume I have a property in Ontario, then I relocated to maybe Calgary because of work, Alberta, because of my work. Now, and I've not lived, so in Calgary, maybe I stay in Calgary for 4 or 5 years. I'm buying a new home in Calgary. Now, because I've not lived in my home in Ontario for 4 years, you understand? So if I buy a new property in Calgary, I qualify for this first-time home buyer because of this in any of the 4 preceding years. And the last one, I believe people in Ontario will be happy about this, Ontario staycation. So government is trying to encourage people to have their vacation in Ontario so that I can boost business in Ontario. So for example, if I go with vacation with my family to Niagara Falls, maybe we stayed in 2 nights or 3 nights in Niagara Falls, the hotel accommodation, now is only accommodation, either hotel, motel, Airbnb, rental lodge, those are the things that you can claim. And as a family, you can claim up to 2,000 or 1,000 as an individual. And it's for accommodation for less than a month per stay. So those are the key changes. Now, especially for people that this will be the first time they will file their taxes, this slide is very, very important. So these are the tax deductions. As Ella said, we said from our salary income plus other income, we get total income minus your deductions to get your net income. Then minus other deductions to get your taxable income. So these are the major deductions before we arrive at our taxable income. Now, this other part of the slide, the tax credit will only reduce. Now, after applying the tax rate on your taxable income, we get an amount. Then the tax credit will now be used to reduce the amount that has been derived after applying the tax rate on your taxable income. So these two are just the major game changers. You need to ensure you maximize your deductions. You also need to ensure you maximize your tax credit. Now, most of us are familiar with RSP or retirement payment contributions. For those that are new, government is trying to encourage us to save towards retirement, either retirement pension plan or retirement savings plan. Now, what use this? So if you contribute, let's assume 10K in a particular tax year, government will allow you to defer a portion. So let's assume my total income is 70K and I contributed 10K. Now, government is saying the 10K I contributed, 10K out of my 7K, I can defer the tax to be that I should have paid on that 10K till my retirement. Now, my tax brackets based on my taxable income, my tax bracket is around 25%. But at retirement, because I might not be earning so much, my tax bracket might be 15%. So government is allowing me to defer 10K out of my income to retirement, because at retirement, effectively, I will pay lower taxes. Professional union dues, those of maybe you're a chartered accountant, you pay CPA dues, or HR, HRM, maybe project management, professional dues, you can use it to reduce your taxable income. Childcare expenses, for those that we have children in daycare qualify. Now, it's not all childcare expenses that qualify. For example, if you enroll your child in basketball or in swimming or in other extracurricular activities, they do not qualify as childcare expenses. But during summer, because government realized that you might need to work, so summer activities like maybe football or soccer event during summer, or lodging during maybe overnight, maybe summer camp during summer period. So most of the summer activities and the normal childcare expenses do qualify. And also for people that their children attend private school, there's a portion of the private school fees that also qualified as childcare expenses. Work from home expenses, government introduced this during the pandemic and just trying to support us for people working from home. So there are two different options here. You can either use the temporary method. The maximum you can benefit from the temporary method is $500 deduction. But if you use a detailed method, you can claim as much as 3K or 4K or 2K employment expenses to reduce your taxable income. The goal is the higher your deductions, the lower your taxable income. But for you to claim a detailed method, you need to get a form completed by your employer. The form T2202X must be completed by your employer if you work from home, if you want to claim the detailed method. If not, you can only claim the temporary method. Other employment expenses, this one too, I will talk about this more in subsequent slide. Then support payment for us, for some people that are single parents and they get, maybe you are a single parent, but maybe you are paying support to your partner. Maybe you guys are divorced, or you are paying your partner maybe monthly for a child to take care of the child, maybe $1,000 monthly. So government allow you to use this support payment to reduce your taxable income. The recipient of support payment ideally is an income. So the government expects the recipient, because if you are paying support, the government will say, who are you paying it to? The recipient to, the beneficiary should recognize this as an income, and to some extent you pay taxes on some portion of that. Now, moving to the tax credits. I know we have a lot of students in the house why should you file your tax as a student? Even if you do not have any income in 2022, as a student, if you pay school fees, please file your tax credit, because technically the value of your school fees, monetary terms. So let's assume I paid 10,000 worth of school fees. The tax credit on that 10,000 is 15%, which is like $1,500. So you can carry over $1,500 into subsequent tax year, even if you do not earn any income in that tax year. So please, students, as long as you arrive Canada in 2022, even the tax law even says that even if you arrive Canada the last day of the year, December 31st, 2022, you are a resident of Canada, you are required to file income tax. Then also for students or for that maybe pay school fees or you borrowed to go to school, you can get credit on the interest you paid on student loans, medical expenses. Medical expenses is not all medical expenses. If you walked in today to Shoppers Drug Marts, I know when some of us got to Canada, they will advise us, please keep all receipts. It's not all receipts that are tenable for tax purposes. For example, now, if you walk into Shoppers Drug Marts and you buy Tylenol, you can't claim that. You can only claim prescribed drugs. So prescribed by any medical personnel, prescribed drugs. Then maybe you went for a lab test and you were not refunded, or you have a medical insurance, or you were not refunded for some portion. You can only claim the part that you were not refunded. So let's assume you have dental expenses, you have the dental insurance, but they refunded 80%. So you can claim the 20% back. So you can only claim portion not being refunded. Of course, donations, which is also key. Donating to your churches, to religious organizations, to NGOs. You understand? You can use that to reduce. You get tax slip from those organizations you donated to. You can use that to reduce your taxable income. We have mentioned home buyers amounts, dividend tax credit for those that have stock investment, shares investment. The dividend you earn, income, you're supposed to declare it. Also, for any dividend, you also get some credit to reduce your taxable income. Political contributions. I know some of us supported one or two candidates in the last election in Canada. Any amount you contributed, you can use it to reduce your taxable income. Then Canada training credit. So government is trying to encourage people to get themselves developed, improve their capacity to support the economy, to make money. So if you attend any training by any recognized institution in Canada, we have a training credit of $500 per year to claim. Then digital news subscription. Government is trying to encourage us not to take on paper subscriptions. For example, now subscribing to Bloomberg and I pay $2 per month in a year, $24. I can use that to reduce my taxable income. Yeah, so I think these are just strategies that individual uses, apart from what other people, some people uses this to reduce their taxable income. Like for RSP contribution, if my limit is exceeded and that of my spouse, for those that are new, so for your RSP, there's what they call contribution limit, and there's also deduction limit. Every year, you can't contribute more than what has been prescribed based on your prior year income. Contribution limit, deduction limit. But if you have exceeded your contribution limit and your spouse still has room, you can contribute into your spouse RSP. But because you are the contributor, you can use that amount contributed to reduce your taxable income. Leverage. Now, some people, maybe because they don't have, either you have savings or you don't have savings, you can even borrow to invest in RSP, because the return you will get from investing in RSP, they are in terms of, so let's assume if I buy RSP worth of like maybe $10,000, that $10,000 can increase based on my own personal situation, 10,000 worth of RSP can increase my refund by almost 3K. Now let's assume I borrow to invest in 10,000. The cost of borrowing can never be up to 3K. So I will use the additional refund of 3K I'm getting from my tax filing to repay my borrowing, then for my savings, I'll cover up. So effectively, the 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 return on even borrowing to invest in RSP is more advantageous than just not doing anything. Then also business investment loss. If I have investment in shares, like last year, a lot of shares lost value. People intentionally sold their investment that the value have depreciated, and with that, they have what we call capital loss. Capital loss will reduce my taxable income. So imagine I have a capital loss of $5,000. It's going to reduce my taxable income by $5,000. And also, if you have crypto assets too, if you have loss in 2022, of course, you can use all these vehicles to reduce your taxable income. Investment expense, as Ella said, most of these millionaires you have in this part of the world, they don't invest in assets like in stocks, in bonds, and the rest with their money. They borrow to invest because at the end, the cost of borrowing, they will use it to reduce the income they make from that investment. So effectively, they're just, it's a win-win for them because they know that even if I borrow $1 million to buy shares, the cost of the bank will charge me the interest expense. I will use that to reduce my taxable income. Then other employment expenses. So let's assume I have an incorporated business. Like the people that work from home, typical work from home expenses, salaried income, you might not be able to benefit from this. So let's assume I have an incorporated business. I'm one of the directors of the incorporated business. So I can issue myself, I pay myself salary, maybe 2,000, 3,000, or 10,000 in the course of the year. But I can issue myself a document called other employment, is it Form T77S? So Form 77, you understand? T77. Now, with that form allows me to claim every employment expenses. It can allow me to claim all my vehicle expenses. Now, my phone calls, not even my work from home expenses. These are expenses incurred in running that business, either from home or from anywhere. You understand? So let's assume I'm traveling to US for one business event, I can claim it. Now, effectively, all those expenses I will bring them to my personal income taxable because I have that form that I can use that other employment expenses to reduce. So, but you can only benefit from this type of strategy if you have an incorporated business and you can issue such form to yourself because you are one of the directors. Then the other one is more of, as Ella said, for those of us that you only have salaried income, it's like you are working for Canada government. You can effectively save on your taxes if you have a side business, either a sole proprietor or an incorporated business. Now, as a business, so for a business that want to reduce its business taxable income, you can invest in private retirement plan for the directors. So let's assume after the end of the year, I realize that as of December, my business taxable income is like 100K, and I don't want to pay so much taxes on that 100K. I can decide, oh, as a director, okay, let me open a retirement saving for the director. It's like 40K. I can decide to contribute 40K in 2022 to my own retirement saving. As an individual, my retirement savings account is going up by 40K, but for the business perspective, the taxable income of the business will reduce by 40K. So benefiting the director, also benefiting the business. Then another thing we can do is we can pay our underage relatives. Like for me, my child helped me with data capture for some of my work that I know she will be able to do. You understand? I can pay her per hour. You understand? I'm paying her. I'm paying her. Of course, the rate will be fair because when government comes and if they discover that you're paying your maybe 12-year-old son $50 per hour, that's questionable. Something that is fair, you understand, you're paying. And with that, you're using that to reduce the business taxable income. Of course, you should be able to support the payment because when the salary comes calling, they want to see the proof that you actually make these payments to your child or relative. Then, of course, we earlier said work from home. You can claim your rent payment. If you have a business, if you operate your business from home, I can use as a business expense. I can claim part of my mortgage interest as a business expense to reduce my business taxable income. Also, insurance, home property, I can use that to reduce my business taxable income. Vehicle expenses. Either you have only one vehicle for the family, I can use that to reduce my business taxable income based on percentage usage or mileage allowance. Then GST registration. If you have a business and you're not registered for GST, you're losing out because effectively you won't be able to recoup the GST you pay on expenses. A quick example. So let's assume in a particular period, I collected GST on the revenue 10K, but on my expenses, the GST I paid is 2K. Now, what if I'm not registered for GST? What I won't even have collected the 10K for the government so I won't have even collected anything from the government. But because I'm registered for GST, what I will remit back to the government is the 10K I collected on behalf of the government minus the 2K I paid on my expenses, GST on expenses. Effectively, what I will remit back to the government is 8K. So I have like technically a 2K savings because I'm registered for GST. Yeah, so I think that is the end of the presentation. Blessing, or and take it away. Hi, Ugo.
I told you guys that he was loaded, and I know that he's poured out a lot of information all at once. We still have people joining at this minute, so I don't know how they'll be able to catch up. We are recording the session, and we'll try to have the session uploaded on our YouTube channel so that you guys can watch it later. Uncle Shea, thank you very much for this expose. Now, we are going into the questions, and I know that there's a whole lot of questions people have. Some people already have their hands up. So we will take it one question at a time. If you have questions, to just make this process very simple, could you please put your questions in the chat and I would read it out and then he can respond to it rather than all of us unmuting and talking at the same time. And I'll please also encourage that we listen carefully. Your question might be answered by someone that might be asked by someone else and already answered, so that we don't have, if I see a question that has already been answered, I wouldn't read it out. Thank you very much for complying, guys, and thank you all for showing up today. So I'm just going to the chat. Let me see if I have any questions there already. So we have one question from Boma. The key business tax strategy, does it apply to sole proprietorship?
Yeah, most of them do not apply. Some do, some does, but most of them do not. So as well as advice, you maximize your taxes mostly when you have an incorporated business.
Okay. Thank you very much. Now, let me just ask, I know this is one question that a lot of people would always, there's Intuit, there's TurboTax and all those tax software. What would you advise using a personal software to file our taxes versus using someone that is, experienced, such as yourself?
Yeah, so for me, so like I'll use my case as a scenario. When I first got to Canada, being a chartered accountant, okay, I believe I should be able to file my tax myself. So I took on one of those either free or paid software to use. So after filing my tax that particular year, and then I went for income tax training in Canada for a couple of months, you understand? And I now went back to look at what I found. I realized that I could have done it better. Do you understand? So I could have done it better, assuming I was trained before filing using a free software. Now, what our advice is, if your case is not complicated, you only have maybe one T4, and you don't really have a lot of benefits, maybe medical expenses or credit or deductions. Yeah, if it's straightforward, one T4, you can. But when you have like a lot of benefits as a family, it's advisable to use experts that will help you guys maximize your benefits legally. As I said, legally, because we have some tax accountants in question that they just want to make money, like they want to maximize your refund by doing illegal stuff. I would recommend that anyone that you are not sure of the quality of the work they do and integrity of what they do, please don't patronize them. They might advise you, we can help you get as much refund. But if the refund is not legal, CRA, the government will surely come back. Maybe it could be in a couple of years. So if your case is not complicated, you can use free software. But if you feel it's complicated, I would recommend you engage experts on this.
Thank you very much. I think you've said legal, legal tax returns and filing and all of that. There are situations where, and I mean, we've seen in the group, some people asking, they want under the table, they want cash jobs, what's the implication of that? Like, why would you do a cash job? And, how is there a way that CRA would not know your full income, basically?
So the cash job, I know maybe some people, due to their residency issue, some of them might not be PR, some of them might be, but even as a student, when the employer is saying they want to give you cash job, maybe they don't want to report such income, I'm not sure. But ideally, employer are required by law to send the income you earned through them to CRA. So CRA mostly have the record of all the income we earn. You understand? But for the cash job, I don't really know. It all depends. Maybe the employer will be sending it. But if, as Elia said, in this part of the world, the government believe we're honest. So if I do a cash job myself as a person, I will report it. If I sell my car, you understand, and it's only between myself and the buyer and the seller, you understand, the government expects you to report it. Report what is due. Give what is you should give to Caesar unto Caesar. You understand? So let's report. Let's do the right thing.
Okay, thank you. Does childcare expenses include education materials such as car seats or any other education materials that were bought?
No.
You said earlier in your presentation that income earned outside Canada in 2022 should be reported. How do you report such income?
Yeah, so we have some people that won't get their pay slip from Nigeria, or if you are not able, it depends on the level of the type of income you earn from Nigeria. So the worst case scenario is it will be reported as other income. Now the question is, other income earned from Nigeria, did you pay tax on it? So you should be able to determine the amount of tax you pay on such other income.
Okay, thank you.
It's always advisable to do the right thing because there is a tax mutual agreement between Nigeria and Canada, and you don't know what you want to do in Canada. Maybe some of us are still PR or some of us are still students. They are earning income in Nigeria. There's bilateral agreement between Nigeria and Canada. They might have access to some of this record. So it's always advisable. Let us do the right thing.
I'm so sorry to butt in, but I don't understand the answer that you just gave. I'm so sorry to butt in, please. I don't understand the answer you just gave to that question.
Is it a question on reporting income from Nigeria?
No, the answer, yeah, so I think the question is, if you worked in Nigeria in 2022, do you file tax for the job you did here, as in for the job you did in Nigeria in 2022?
So let's assume, I don't know when that person got to Canada, but let's assume the person arrived Canada in 2022. Let's assume the person arrived Canada July 2022. Now the expectation is you are a resident of Canada as at the end of December 31st, 2022. So you are required to file your tax. Now, what are you going to file? You are expected to report both the income you made in Nigeria before moving to Canada. January to June, report that income. But that income will not be taxed because you are not yet a resident of Canada as at the end of June. But they expect you to report it, but it will not be taxed. Now, what will be taxed is the income you earn while you are a resident of Canada between July 1st and December. That will what be taxed. Now, when we say resident, so let's assume I was a resident of Canada from January 1st.
Okay, sorry, sir. Let me not just assume. I came into Canada February 18, 2023. That is 2 weeks ago. I haven't earned anything in Canada yet. But
Were you a
I earned
resident
in
of Canada?
Nigeria.
Okay.
I earned in Nigeria in 2022. I came into Canada in 2023. Am I filing for, yes?
No, because you were not a resident of Canada as of December 31st, 2022.
Okay, noted. Thank you, sir.
You're welcome.
Okay, thank you very much.
I also have a similar problem with hers,
So,
but I came.
Please, can we revert back to what we were doing? Questions in the chat, please.
No, it's still this particular question because I'm also not clear. Because she came in 2023, but I came in 2022. But I'm also not clear. I paid taxes on my income while working outside Canada. So I want to be very clear what exactly I'm reporting, the net income I got or my overall, like what's the word for it? Like what I was supposed to be paid without the taxes.
So our advice to do you have a pay slip?
Yes, I don't think I have for all the months of 2022.
Yeah, so as Ella said, either you report gross or net on the income you earned before coming to Canada. It's only for reporting purposes. You won't be taxed on that component. Do you understand?
Okay.
But I would advise you just report the one you can support.
So a report can include a statement of annual remuneration. Just have your former company write a statement of annual remuneration and put the taxes that they deducted from your salary, and then you could upload that as part of your reports. All right, so we have a few more questions in the chat, and I'd like us to have the opportunity to go through all of them before the hour is up. So someone is asking, if I am claiming the credit from work from home, would my spouse have to also put it in on his own, since we would basically be claiming the same thing?
Yes, the law allows you to do that, but it now depends on if you are claiming. No, because work from home is dependent on the space you use to work. Let's assume you work from the basement. You can say, okay, 20% of the total home space. So if you are claiming maybe 15%, your spouse might also be claiming 15%. Do you understand? But both of you, as long as both of you work from home, then you can claim it.
Okay, thank you. Someone says, I'm a student and I preferred my tax to know what I'll get. I got all my breakdown, but my school fee breakdown was not showing. I also tried Wealth Simple and it was the same. School fee breakdown isn't showing. Can you please explain why? I'm not sure. Well, Shay, I don't know if you can answer this question.
Yeah, so did you get, I would advise such person to get a tax slip from the school. Your school fees is not showing. So ideally, all the schools will send a tax slip to CRA. So when you pull from Wealth Simple or any other tax firm software, it should pull that data from CRA. So there's tendency that, from experience, as at the time, all the data has not gotten to CRA. All the data has not gotten to CRA. So some of my clients are sending their documents, but from experience, no, I cannot submit at this time. Before I can start submitting any tax return, it will still be like either the second or third week in March. Because at this time, some of those employers just sending their data to CRA. CRA will upload those data on their system. So if you pull from Wealth Simple, it's not yet there because it has not been uploaded by CRA. Just be patient. You understand? With time, maybe in a week or 2 weeks' time, you will be able to pull such data on CRA. But if you don't have your tax slip, please contact your school. Your school will give you Form T2200. Yeah.
Okay. Thank you. Can an accountant fees be gotten back through tax credits?
Yes. So, for example, if you file your tax and you pay an accountant, you understand. Yeah. But you can only claim for business. So, as an individual, there's no way you can put that. Do you understand? Except you have a business. That's when you can claim those accountant fees. As an individual that does not have any business, you cannot claim that.
Okay. Thank you.
Can I ask if the business must be incorporated?
Pardon?
In relation to that
must
question,
the business be incorporated for you to claim accountant fees?
No.
So a sole proprietorship or unregistered business. So let's be clear. I plait hair in my house. Am I an unregistered business?
If you are not
Can I
registered,
claim income?
if you are not registered with either the province or Corporation Canada, you are unregistered business. But
So can you
the
still
law,
claim income and expenses?
yes.
Okay. And how does CRA verify what you are saying or claiming?
So to some extent, they believe we're honest, you understand? But if your claims are suspicious, so someone is now claiming accountant fee 5K to 10K, do you understand? Then they can now ask for more information.
Okay, thank you. Can one file taxes for a previous year, perhaps due to having missed the opportunity to do so before the last deadline?
Yes, you can file tax as back as 3, 4, 5 years. Even if you miss deadline, you can still, so let's assume you miss deadline this year. In September, in July, in October 2023, you can still file. It's just that if you owe government, they will charge you interest from the date it is due.
So if you don't owe, there's no penalty for late.
Yeah. But please, let's file all our outstanding taxes.
So someone wants to get some clarification on filing as a couple. Does each of the party feel a different T1 return and then incorporate spouse balances in the relevant boxes, or do we complete one as a couple?
So the law treats couple as separate entity. So each one will file. Sometimes even the husband or one of the couple might owe, the other person might have a refund. Treat them as separate entities. But for couple, it's always recommended they file together because that's when you maximize your returns, the tax benefits and deductions.
Okay, thank you. So if one relocated to Canada in 2022, what kind of benefits or tax returns can one get back, and what should they file to get these benefits?
Yeah, so if you relocate to Canada in 2022, you're required to file your taxes. As Ella said, you have to report both the income you earn before coming to Canada, then the income you earn while in Canada. Because you did not spend the entire 12 months in Canada in that year, you might not qualify for all the credit, but you will still qualify for some benefit or credit. But as Ella said, if you engage someone, an expert, especially for those that are coming in, this is their first tax year, is not straightforward. You understand? You need an expert to guide you to ensure that the proper thing is done, because you have to consider the date of immigration, the income you earn before coming, the income you earn in Canada after arriving in Canada, and the other applicable tax credits.
From your expertise, what would you suggest to be the best tax filing, software or support? I mean, I know there are a couple out there. There's WellSimple, there's Questrade, there's TurboTax. What would you advise would be the best one if someone wants to self-file?
Yeah, I think I have experienced, maybe gone through a lot of them. I think they're almost the same. But you understand, the main thing is being able to understand the output, because some of those software, some of them, you need to check one box. If you don't check one box, you won't get the desired result. So if you are not trained in taxes, or you're not familiar with the process, and you use a free software, you might not be doing the right thing in entirety. So I recommend, especially for those, this is their first year, it is very, very complicated. I would advise you try to use someone that is familiar with Canadian income tax to help you with filing your taxes.
Thank you very much. There are a couple more questions, and then we'll have to bring the session to a close because we really want to keep it to 1 hour. So we'll just take those questions quickly, and then further questions can maybe be, Shaya is a member of the group. You can maybe send him a DM. Shaya, is that okay? And we can respond. All right, so I'll take this last 3 questions. Came into Canada December 22 as a student, not yet working in Canada. Am I expected to file tax? And is there any credit based on school fees already paid?
Sure. as Ella said, even if you're a student and you got to Canada, the last day in 2022, you are required to file your income tax.
As a follow-up to the question on filing as a couple, you said government treats each as a different entity, and then you now ended with, it's better to file together. How do you file together as a couple?
So when you file together, it means that you're using the same software or you're using the same accountant, and your files will be linked. So for example, donations now, if I donated, let's assume I donated $3,000, my wife donated $2,000. So 5K as a couple. Now, because donation tax, the law around donation says that anyone can claim the amount. So the 5K both of us donated is beneficial for someone that has the higher taxable income to claim that 5K. So the family will get a higher refund. But if you file separately, if you just treat you guys 2K, 3K, and if you add your total refund together, it won't be up to when you file together as a family, because the software is trying to optimize your return, your benefits. So the software will be checking both return and see which is advisable to claim this. Is it which of the partners is advisable to claim this credit or deductions? Yeah.
Okay, the last 1 minute. Uncle Shaya. I'm using soft voice to call you now. You answer. Uncle Shaya.
I'm not an uncle, I'm a young man.
I'm giving you the title of uncle now because I want to ask you. There are people who are asking, there's tax clinics. I know some churches also organize some free tax filing and everything. But for you, for the NIROW community, what's the discount available? Like if we wanted to use you or get some more information, get some training, what does it entail?
The question is not straight, it's not direct. I don't understand the question. Is it training?
What are your fees, and what are your fees to use you, and are there discounts for NIROW members?
So for me, this is more about, okay, I tell people it's about the time, what's the worth of my time, the quality of work I do, and I also use a premium software. So it's expensive. I use a premium software, which allow me to do a proper review of the work I do. You understand? So for individual now, I charge $100 for individual that are working. For students, I charge $80. You understand? That's the standard I charge. Now for NIROW, I can consider I can consider some discount. Yeah.
Okay. All right. Thank you very much, sir. I really want to appreciate you taking the time out. I know you were on the road throughout yesterday and over the weekend, and now you just landed and you had to jump into the session with us. So I really want to say thank you for taking the time out to be with us today.
I was the first person to come here. You've not answered my question.
What's your question? What was your question? I think I took all the questions.
No, you haven't to check.
No, please ask so that I'm not sure. I'm scrolling through and I'm looking to see. I said, what about a non-working student? He said individuals 100 for those that are working, students $80, and that if there's NIROW, he will consider some discounts.
Oh no, so my question was, let me find my question, is in regards to filing as a couple and filing individually. Is it better to file as a couple, and what are the disadvantages if you file separately? That's what I asked.
Okay, all right. I think he had also addressed that question. That's why I skipped it. He talked about the fact that, well, Shaya, I'll leave you to answer it. You're the expert.
Okay. So, as Ella said, it's always advisable for couple to file together, because the software will look at, there's some credit or benefit that the tax law allow any of them to claim it. I use donation as an example. If both couple donated maybe 3K and 2K, the total is 5K. Now the law allows any of them to claim that 5K, because if they claim it separately, the refund they will get will be lower than if one of the couple claim that 5K. Do you understand? So Azela advice is recommended for couple to file together. With that, you will maximize the tax deductions and credits when you file together. But you know, some people will always say that, no, let us file. Some people have that belief that except that you are doing the wrong thing. Because even if you are filing separately, the law expects you to put on the document you're going to file, they will ask you what's the net income of your partner. Now, the partner that has not filed, how do you know the net income? Do you understand? So people are just putting an estimate, and at the end, if salary comes after you, they will say that after filing your partner's tax return, we discovered that the net income you inputted was wrong. So when you file together, the system will pick the two net income and it will optimize it. So please, we encourage it, and you derive maximum benefit when you file together.
Thank you very much. Gloria, I hope that answers the question. Shaya, is it okay if we... Okay, thank you. Shaya, is it okay if we post your slides on Telegram? And your contact details. Like, you know, can we share the slide, just the slides on the Telegram group? People can read for those who are not here. And then if we can share your email or phone number, like, you know, so people can contact you after this session.
Yeah, so I think the best value they would derive is for people to go and watch the video. I believe Ugo recorded this session. So let's just share the video, let people go and watch. They will derive more value from that. Yeah. But you can, of course, share my contact in the group. People can chat me up if they have further questions. Let's get back to them.
All right. Thank you so very much. Thank you for everyone. Wow, 42 people. At the point we're almost at 50. Thank you to everyone who joined the session and all your questions. We would send out a survey link on the group so that you can give us feedback on the session so that we can improve. We also are looking for feedback for subsequent information sessions that will benefit the community. So we'll be very happy if you are able to share topics that you think we would want covered that would support your growth within the region. Have a wonderful evening, everyone, and God bless you. Uncle Shaya, any last words?
Yeah, thank you guys. I appreciate the leadership of NIROW for having me to engage the NIROW community. Thank you guys. Our advice, please go and watch the video, and you can always get back to me if you need additional information or question. I'll be readily available to support.
Thank you, sir. Oh, thank you. Thank you, Gloria.